Hey, greetings. Dr. Jeffrey Scott here, and this is my weekend market update for February 2nd, 2025. My email address, one of many, is hgsi.at gmail.com. I titled this one, Will Trump's Tariffs Lead to a Sell-Off? And we'll talk a lot about that over the next 30 minutes or so. Again, my name is Jeffrey Scott. If you like these videos, hit the up thumb. And if you're new, hit the subscribe button, hit the alarm. I do these over every weekend, but the time depends on my life. And speaking of my life, I am sitting here in the West End, Bahamas, on my boat, sitting outside, and it's only desk, and there's a lot of ambient noise, so my apologies in advance for that. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intended videos to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And I have tools for multiple platforms, but I am an independent trader. Speaking of multiple platforms, Wealth Charts, TradeStation, TradingView, soon to be Metastock, and soon to be the Market MRI Pro app. If you are a Wealth Charts fan, I put a video out every morning when I'm not traveling. So there'll be one probably Monday morning. Since I don't get back to Tuesday, I'll try to do one on Sunday night or Monday morning before I take off to come home. And I do that at stocksanddocs.com, which happens to be the name of my boat, Stocks and Docs. I have started a Google group, and it's free. It's not it's not for solicitation. There will never be a charge to be a member, and you'll get freebies such as discounts on tools that I might bring to market and private educational webinars. And we did a 3.5 hour marathon a week or so ago. If you want to join, just go to Google Groups, search for Top Down Trader, click join, how you want the emails to come to you, and give me 24 hours to let you in. Love to have you. Group's going very quickly. I guess free is good. This is my new heads-up display. This is in Market MRI Pro, and this is always on one of my machines. And I watch it during the day. So let's just look at the Friday close. You can see the VIX was the highest at 337 and finished up at the 79th percentile in its range. The Qs, which were up a lot during the session, in fact, they were up as high as 1.62%, finished down 0.15. The spiders were down 0.53. Diamonds down 0.76, and the Russell down 0.9. And you could see they were all at the bottom of their range. And what happened? I think you all know. Trump came out and said tariffs will be announced on Mexico and Canada, and the market sold off hard. If we look at 1 day change here on the sectors, you can see the only things that were up were communications, and the rest were down. And again, if you look at the closing range, for the most part, things finished well off their highs of the session. Energy, staples, materials bringing up the rear. And if I looked at what themes were working, it was 1 day change here. The only things that were up were internet, telecommunications, and tech software. Now over here, we have the new high, new lows, and these are the weekly close, and the net new high, new lows remained positive on the NYSE, but they started to have some negative ones filter in on the NASDAQ. Down here, we can see on the top, we have the S&P 1500, the NASDAQ, and the NYSE. Each of them look at their sectors that were up compared to the prior day. Big reduction. Industry groups, only 13% were up. Here, 24%, here, and 14%. Advances, only 25% of stocks in the S&P 15 were up, 34 in the NASDAQ, and 20 in the NYSE. So it was a harder day, and I know that my portfolio was up a lot early in the day. Should have taken profits. I thought about it because January's for me are some of my best months. I think positive seasonality. Um, And Netflix earnings, when it works well, and it did this year. And I thought about taking some off, and I still have some cash on the side, and I don't have much margin. Any margin I have is for the short positions. Um, I think this market's risky here. And like I said, I thought hard about taking some off when I was on my boat heading to the Bahamas. So it wasn't primarily on my mind. If we look over 5 days, no, it looks like I got the 1 day again. All right, never mind. I have it over 5 days. We can look at that real quickly. We'll just go to Market MRI Pro, which is here. And let's just go into the daily briefing and let's let it set up. I'm using Starlink internet, so it's good, but it's not as good as what I have at home. Give it a second to run. And let's just search by 5 days. And you could see over 5 days, the VIX again was the leader, and the only thing up over 5 days was the diamonds. You could see a relatively, not a big down week, but a, broad-based negativity. Again, things closed at the low of their weekly move. The Q Edge tool on Friday, all the sectors in the S&P 1500 were down. My tool looks at the S&P 500. 83% of the industries were down, 74% of the stocks were down. And you can see here across the board weakness led by energy and consumer discretionary here. If you look at the bucket, the 1 day, 2 day, 5 day, 10, and a month, I'm looking at the same three things. You can see deterioration. And it sort of feels like we're going to see that when we get to the beginning of the week on Monday. It'd be interesting to see if the futures sell off, how much they sell off, and then will they bounce after market opens. If we look at the market breadth tool, really nothing going on. You can see AD lines deteriorating, up down volumes deteriorating, new high, new lows, not doing much. Market really going sideways here. Not extended. This is the 13-week new high, new low. And really not a whole lot to say here. If I look at the NASDAQ, you can see both the NASDAQ on the left, the NYSE on the right, have turned down on the 13-week new high, new low. No recent signals. And if we look over here at the rest of the market, I think there's improvement, especially in stocks above the 50. You can see that over the last week or so. And nothing is so overbought that it has to come down. The diamonds were the most, and you can see they actually eased a bit. My market timing model, it's the same model with whatever platform I use, except this one in Market MRI Pro, I programmed in with the signalers. So you can see the weekly Qs are still in the buy. The weekly diamonds flipped to a buy this week. That's a positive. While the spiders and the Russell remain negative. The daily, it's kind of interesting because the spiders, the Russell, and the diamonds are green, and the thing that's red is the Qs, which have not flipped from positive to negative on the weekly. So it's very choppy. There's no clear-cut pattern, and certainly nothing that says to me to be a hero to the long side. And I think if you just think about the news flow, um, downside might be where this market is going. If we look at the buckets, I look at my buckets for NYSE, NASDAQ, Russell 2000, the S&P 1500. First thing I do is I look to the far left and I see who's got a lot of, what's going on below or above. And there's really no signal above or below. So I don't see a signal on the buckets. It weakened a little bit on Friday. No surprise, the market was down. Now, what are these easing rates telling us? So the 10-year rates are in white. Um, is it, tariffs are supposed to cause inflation? Is there concern that the tariffs put us into a recession and that will change the Fed? I don't know. I'm a doctor, not an economist. But the rates came down this week, despite the Fed saying we've hit the pause button and despite the tariffs. Bad breath is eased off new highs. Well, probably should have changed that and say breath improved. So just change that. Breath improving. And that's something that perhaps should make us feel better about this market. But I really think everything is dependent upon how the tariffs are perceived. Will he cave before Tuesday when they're supposed to start? Will people say, hey, these aren't as bad as we thought they would be? And the market rebounds. Be interesting to see. Big week. I mean, all these red arrows on the left are Fed governor speaking. So you know there's going to be a lot of talk about inflation has come down, but not fast enough. We're going to pause. We'll be data dependent. We'll wait and see what happens. Nothing big going on right now. And I think that's what you're going to hear. It might be interesting to hear if any of them have anything to say about, but with the tariffs coming, we might have to reevaluate. Personally, I don't know how they can't, if the tariffs hurt the economy, rates can't stay up. On the right hand side, you can still see we got a lot of big earnings left. Um, Salesforce, Marvell, among others. Um, Busy week. Actually, stop that, Jeffrey. This is the wrong week again. All right, I'm going to pause this and I'm going to get you the right week. All right, well, this is more like it. Um, this is the earnings that you're going to see this week. It's a relatively huge number. I knew Amazon was here. That's why I knew it was the wrong week. But a massive week of earnings, and as it says right here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So mixed to down week that started with a steep sell-off of tech and AI-related stocks related to DeepSeek and ended with a midday reversal on Friday on tariffs. Busy week with news, the FOMC decision, lots of economic releases. The Dow eked out a gain. Everything else was down, mostly around 1 to 1.5%. Tariffs coming, and they were announced Friday, and then on Saturday they announced 25%, except for oil on Canada and Mexico, and then Chinese raising it by 10%. Timing is mixed. Indices are near double tops. We'll look at that. The Fed is on pause. It seems like the perfect setup for another Monday morning meltdown. That said, it's early in the weekend. The past Monday disaster reversed for most stocks. Before the day ended, the markets could surprise and rally since the news is out. Remember, sell on the rumor, buy on the news, sell on the rumors. Maybe this was a sell on the rumor and buy on the news. I think that those who went to cash on Friday might have had the right idea. And one thing's for sure, and that is to look out for more volatility. Again, my Google group, Top Down Trader, I do nightly videos that I do not post anywhere else, and I give commentary and pick stocks on a nightly basis for no cost. There's actually starting to be an interactive dialogue, which is what I hope for. And then again, the daily site on stocksanddocs.com. All right, now let's go into the programs. Sorry for the mistakes on the earnings. I'm on a boat, not at home with all my tools. Uh, let's look at wealth charts to start. And let's look at, let's go into the 5 minute charts, which is how I like to start my reviews. And it really does tell a story. Let's get the dates here. Friday, Thursday, Wednesday, Tuesday, and Monday. Perfect. So, Monday, huge gap down. Let's just put a line in here from the close on Friday. Okay, so, that was where we closed the prior week. Was where we were, and I moved it. There you go. And you could see big gap down on Monday and then sideways move. But Tuesday, we had a nice rally, did not close the full gap. Wednesday, sideways. We had a nice rally on Thursday. And boy, thinking, man, I'm going to make all my money back that I lost on Monday. And I did. And then market sold off when the Trump tariff news came out. So if you look at it, we did get above the prior week and we're positive on the week for just a few hours. And then the market sold off. If I look at the other ETFs, you know, it's pretty much the same pattern, and it was broad-based, and the one thing that's outperforming in orange is the Dow. Now, I like TradeStation to look at the market indices, so let's just look at the market as the daily markets. So if you look at the spiders, and what I've been doing with the spiders, I've been going into the spiders, and I am sticking a line right here, because we are really in an area. Is this a double top? I mean, technically this was a higher high, but we are in an area that we failed at again on Friday. And we're at a double or a triple top area, and that's something that maybe that should concern us. And you could see a bearish engulfing pattern on Friday here. If we look at the Qs, right, the Qs set their high up here, um, and they failed. Trend line, and they have failed on multiple attempts to get back up. In fact, almost argue that we got that trend line resistance that we have touched here and failed, and we touched it on Friday. Two reasons to think these markets are heading for a drop. But notice right underneath in yellow is the 50 on both of them. And then you got the diamonds. And again, the diamonds is another one where I think a double top risk is in play. And you can see how close we are to that on this. So you have three of the major indices that are right at resistance. You've got the Russell, which is struggling at the 50, and this has a bearish engulfing pattern. This has a bearish engulfing pattern, not the Qs, but yes, on the spiders. So if you're a candlestick person and look at support and resistance, we're probably going down here. You look at the UVXY, we just look at the VIX here in the futures. You can see the VIX on Friday was up 4.37. And then the other thing, and I've commented before, I think the UUP went through some type of adjustment, but the dollar has pulled back into support. And does that look like something that's going higher or lower? To me, it looks like it's going higher. And if the dollar starts to strengthen, that's not good for the US stock market. You can see here, even on the UUP. This is the area that I question where this big sell off occurred at the end of December, almost as there was some type of a reset of the UUP. Because when you look at the dollar futures, you don't see that. I'm sure there's a very good reason that I should know. I just don't know what it is. All right, if I look at commodities, you can see dollar strength, but gold is up. Why? Because of those tariffs. And gold had a little bit of a spinning top there, was up 0.2. Silver, not as exciting as gold. In fact, actually, silver's down here, my bad. I have to think which platform. Silver had a bearish engulfing pattern, so definitely not as exciting as gold, and down 0.7%. And you could see here U.S. oil with drill baby drills come down. Maybe a little relief on Friday. Natural gas is now pulled back to the 50 and the 200. Boy, what a disappointment. When something has failed the 200 for months and months and months, and it breaks above it, you sort of expect and hope that it's going to actually break out and go to higher highs or to have a nice move. And this thing's a failed rally. If you look at interest rates, and let's just flip to weekly for this. Let's see if I can do that. Time frame, weekly, and that's going to change them all. If you look at rates, look at the weekly rate coming up a trend line. Does that look like something that's going higher or lower? On the week, the 10-year was up 1.26%. Now the 30 hasn't pulled back to that trend line yet, but it's still in an uptrend. It was up 1.16 on the week. So let's see, indices at resistance. I see bearish engulfing patterns. I see the dollar going higher, and I think that the rates are going higher here. How does that play? How does that play into a higher market? I think the market's going to be under some pressure. Now to go back into go back into wealth charts, and let's take a look at let's look at the timing model. Let's look at the sectors and see the ratio charts. And so these are easy to make in wealth charts. You can pick whatever you want over the spider. So this is telling you how you're doing compared to the spider. Lo and behold, healthcare has changed and healthcare has become, hard to believe, not a leader, but it's really moved. Biotech, not as much. Discretionary is maintained. Utilities weak. Real estate weak. Staples better than the others, but not great. Same with technology, which has really come off its highs. Industrials in the medium. Financial strong. Energy weak. Communications. This is really about communications. Now, I'm going to start my top-down analysis inside wealth charts, and then I'm going to move into Market MRI Pro. So in wealth charts, let's just take a look at the heat map. Very quickly, let's look at the big stocks. Apple. So Apple has had a nice run. Look at where it was when the Trump announcement came out. That's a pretty big reversal. It broke through the 50 on big volume. Hard for me to feel very bullish on Apple here. And does that mean it can't go higher? No, you can't say that. NVIDIA, 17% down on Monday, end of the week down 15%. Struggling to stay above the 200. Is it done going down? It might be, but I'd be tough pressed to buy it here without perhaps taking out the high on the Tuesday. Tesla. Tesla had crappy earnings, crappy deliveries, and nothing bad happened. In fact, Tesla was heading for a really great day and maybe a breakout on Friday before the market reversed. It was still up 1%. So Tesla looks okay resting on the 50. Meta, woo, beautiful. Again, reversed on Friday after trading higher. Yeah, it's a leader. Microsoft got clobbered on earnings, kind of looks a lot like NVIDIA. Down here, consolidating underneath the moving averages, probably is a no-go right now. No-go for me to buy. Amazon, which has earnings coming, is still doing great. So some of these look good, but a couple really have broken down. The last one to look at is Google, which is another good one. And Google's breaking out to all-time highs despite it. Why? Because they had great earnings. They're not showing up here. I believe they're earnings. I might be wrong. I thought it was on earnings, but you can see the strength here in Google. All right, so now let's go to the wealth scanner. Love this tool. Let's see what comes up in my big list of ETFs for markets, indexes, and sectors. So only one thing at 800, that's ARC Genomics. Then we have telemedicine, loading notes, social media, Meta, super dividends, bonds, aerospace. Does that sound like a strong list? No, it does not. So not only, let me go through it, got resistance on the indices. I've got bearish engulfing patterns. I got a dollar that looks poised to go higher. I have rates that want to go higher. And I have a really crappy top-down view of the market here, showing things besides the healthcare things, a lot of dividend payers and notes. Not a healthy market whatsoever. And if I was to look at the bullish and the bearish sort, you're going to see things that we typically like to look at. So you got oil services, you got intelligent infrastructures, you got lithium batteries. Malaysia doesn't count, copper. And then you have short the Dow, which is interesting. But you can get 474 or 520. Notice there's very few things that are bearish at 520. It's an interesting market. I think this tool still tells me the market favors the bulls, but I just don't think so. I mean, this tool being the wealth scanner. Now, I've developed this new tool called Market MRI Pro because I really wanted, and I did not want to open up another version of it, so I just closed that. I was really looking for a tool that would make my life easy. So this tool has the timing thing I showed you. It's got indices. It's got the daily briefing, which is this. It's got the buckets and its own breadth and ratio charts. But I want to go to the JES layout right now and start to look at, from a top-down perspective, what looks interesting. And I'm still going to stay bullish, but I'm not sure for how long. It's been tough to short markets that are at all-time highs or close to them, but I think we're going to have a chance. Now, my list, which is my list, which is why it has my initials JAS, is the NASDAQ and the NYSE, all the stocks, and then filtered for a dollar price and 100,000 shares. Now, not everybody is going to use that big of a list, and you can filter it even more. If I go to the top down, just get a sense of how weak this market. And if I put all those stocks into sectors, not one sector was positive. If we look at over a couple of days, the only positive sectors, real estate, tech, utilities, communication, but nothing was positive on Friday. This is a several day momentum. If we look at industry groups, see what industry groups were positive. It was led by internet software, manufacturing, business equipment, REITs, asset managers, REITs. Again, not real high growth tech stocks, except for probably internet software. So I could click on, for example, real estate, and this will bring up all of my stocks that are in real estate, and then I can look to see any of them were up, and there were some, and I could start going down the list and see if anything looks interesting. Um, this is one that did look interesting, Orchid Island Capital. It's just when you take this thing and step back, it doesn't look that interesting anymore. From a short-term perspective, you got a stock that's been, let me get back up here, get back there. That's been going sideways. That broke out on Friday. Let's look at a year's worth of data. And that's interesting, but it's really something that had been clobbered. Um, CVL Associates, so that's a stock that looks interesting to me. Beautiful uptrend, pullbacks, and breaking out above the 50. Massive volume, breakout in momentum. PSAR is flipped to be supportive. Um, Beautiful. Look at the relative strength versus the spider coming up to its moving average and the OBV breaking out of its moving average. I like this one a lot, and it's not extended. So I could start to save a list of these stocks by just adding it to hot list. UK, it's what UK will think. No. SACH, no. DHC. So these are a lot of stocks that have just been beaten up and coming off the bottom. So I can just go through the list to see if anything gives me a good looking pattern. This is another one that looks interesting. Tornado Realty, because it pays 3% or so dividend. It could probably come up here, open up the fundamentals. I click on it, it will stay. Dividend 74 cents. So that's not a very big dividend. I think that's 2%. All right. No. 10% would be $4. 5% would be $2. Half a percent will be 20 cents. Not a very big dividend, unfortunately. Half a dollar. Okay, whatever. And you can see here we track earnings, the change, the surprise, revenue, and then a number of popular fundamentals. Next earnings are out February 10th. So this is one that looks interesting. Big uptrend sideways move and a breakout here. And I come down here and I see that the EMS has gone to green. It's got a CPR. It's got volume and it had breakout in momentum the prior day. I like the relative strength in the OBV. I might add that. So I can start to build a list by going through the top sectors, or I could say, let's get the 5 industry groups, 2, 3, 4, and 5. And let's just do the same thing here and see if there's anything we like. RBC Bearing, it's a $350 stock and it's getting away from us. No, no, no. I'm looking for pullbacks and uptrends with momentum. I like buying them when they're above significantly their 200-day moving average. All these are below the 200. Well, this one looks interesting. Avalon Bay, they make some very nice apartments. Pull back. I only would buy it when it got above the 50. Good volume here. Should have put a lot on my list, so I'm going to add it to my hot list. I could just keep going down the list looking for stocks that make sense. So true top-down investing is you take a list of industries or sectors. If you want to be long the market, you find the best looking industry sectors, then find the best industries within them, and that's what you look for. Bottoms up investing is where I'm going to leave you with tonight. And so I just go back to the impulse list. There's my 3,500 stocks. Now I have created a number of preformed scans. One of them is I only want stocks that are about 500,000. I only want price greater than 5. And I only want those with 200-day moving average. They're above the 200-day moving average. That brings my list from 3525 down to, well, it should bring it down to a lot less. It might be because I'm on Starlink and it's taking its time. Come on. Well, what I would do then is I would then put, there you go, it's 1137. And then I might throw in some signals. 2-day, this is a 2-day momentum indicator, and it's not going to have a lot of stocks. But this is an indicator that I will run during the day, after hours, because I found over time, everybody watches my videos, that I really have found that this is my go-to signal generator. Now, it's taken forever, which means the Starlink is unhappy, or it means I've used up my allocation, which might be what the case is. Come on, Starlink, give me. And this is interesting because the one that pops up is this ORC, which is the one that pays a dividend. Um, a lot of these mortgage services, specialty lenders popped up on my scans, and you can look at this one sideways move and it broke out. So do I typically chase this pattern? No, but maybe there's something here. And when I look at some of my best long-term performers, they have been stocks that have pulled back for a long time and turned around. I don't know. It's hard for me to recommend something that's been in a downtrend for so long, but I will agree that this one looks very interesting here. I haven't shown you a lot of great stocks to buy. So let me go into HGSI just to finish, because I did look at a lot of stocks over the weekend. And I know I'm all over the place by product because I'm not home and I do use all these products each weekend. And at home, I can put together in one, but I don't really have as much time. So let's just go into my buy watch list and let's look at my pullbacks and uptrends. And these are probably um, some of the ones that I'm most interested in this week. And why didn't any show up? All right, well, let's look at the buy watch. Let's see if there's any here. Let's just rank them up. I'm just going to go through some stocks very quickly, and then we'll say goodbye. And there's 47 here, so I could probably do that in 5 minutes. So let's do that. So this were some of the stocks that I thought were interesting this week. I'm looking at HGSI, which is where it all started for me. As you can see, it still is for me. So him and hers broke out here. This is a stock that's been on a big run. Probably goes higher because they've cut a deal with with Lilly to give a branded version of Manjaro at a lower cost. And it's one of these mail order pharmacies in counseling, started with erectile dysfunction. It's an interesting story, probably not going anywhere, probably going higher. HubSpot, this is apparently going to be one of the victories in AI, no matter who wins. Really broke out this week. It's given us a little bit of a flag here, consolidation. Think about it, was a bad week, bad Monday, and this is what it did on Monday. Um, am I buying it here? No, I want to wait and see what it does. This is a list of stocks that I'm going to watch. Let me make sure I got it in alphabetical, the right order. All right, there's him and hers. Next one on the list was AppLovin. Wow, look at this stock. from 48 to 400 in a year and a half. It just broke out of its chandelier stop here. I think this one's ready and poised to go higher, but if the market sells off, it'll probably sell off too. It's another of these high flyers, but this one actually has great earnings growth. Amazon, we talked about already, looks like it's going higher. Meta looks great. Alphabet, as I said, looks great. Celestica is a contract manufacturer. Big run here, big dive down on Friday, excuse me, on Monday. It was recovered up, made up almost all the loss for Monday. These are just the stocks that I liked. Some of them are ready to buy, some are not. Accenture's already broke out and run. I'd look to buy it on a pullback. Costco, I don't understand. I love the company. Let me say that first. Look at its PE, 60. Look at its growth rates, and it's still going higher. HubSpot, we mentioned already. DocuSign, uptrend, pullback, a little bit of a shallow cup, and looks ready to go higher. Root is an insurance services tech company. Pulled back after this big run up, ran up to 50 and broke out this week. Kingstone Companies, another insurance broker, very lightly traded. That's the problem. Pull back to the 50 and going higher. Kroger, boring, but I guess if this market sells off, staples are where you want to be. Fortuna Silver, a lot of the silver miners look good. This one broke out. Look at all these kahunas in a row. And for the long-term HGSIers, those 2 days momentums come from the kahunas and outer force. Vertex Pharmaceuticals, been sideways for a long time, pulled back. You got to love the company that's changed the lives of patients with CF and other diseases, took out the 200. Is it ready to rally? Gilead, same thing, probably better chart, uptrend, sideways move, and breaking out. The Bank Corp, a bank, sideways and a breakout. CME Corp, looks like to me it's pulling back here to the 50. I'd be looking for a breakout from here. AbbVie, it broke out on Friday. It looks like a red candle because it closed lower than the open. But the Bongo Weekly flipped. It had a pocket pivot, and it had a kahuna, and it pays a 3.4% dividend, which most biotechs do not pay. Keysight Technology, steady uptrend, pull back to the 50, looks like it's going higher. These are just some that I'm looking at. Fiserv, which I do not think is oil services, I believe it's a financial services company, as it says in the body. Little bit of a cup, looks like it's ready to go higher. Janice Henderson broke out on Friday. SCI Investments is one that's pulled back and breaking out. My intent here is just to show you some of the better looking charts that I saw that I thought were interesting and potentially still actionable. I am not going to intentionally show you something that I don't think you can buy because it's gone too far. Some of these have virtue, will benefit if markets get wild and volatile because of volume. Broke out. Taiwan Semiconductor pulled back this week with NVIDIA. Um, I don't think it's going anywhere. Great fundamentals. Verisk Analytics, from a little bit of a cup, broke out above the 50. Welltower, exact same looking chart, pays a 1.9% dividend, and these guys own medical office building and other healthcare related real estate. Unlikely to have a lot of problems, even if rates go up and the economy slows. The one place that does well in a bad economy is healthcare. Flagstar Financials, it kind of looks like that ORC, a stock that was dead, and all of a sudden it's making its move. Look at the daily, speculative, had a Bible gap. And then here's one that I just couldn't help myself. It pays a 9.2% dividend. It's a Blackstone secured lending. Remember I said those mortgage specialty finance stocks are hot. This is one of them. Palomar Holdings is in the insurance industry. A little loosey-goosey, but a beautiful steady rise sitting on the 50, ready to go higher. Adapt Health, that's another one of these beaten up stocks that's starting to move up. Astera Labs, this is a IPO, you can see here on the weekly, in the AI space that got hammered this week, and then it started on Monday and then worked its way back each of the next several days. This was a high flyer. I think this one's interesting. It's got earnings, probably worth watching. Broadridge Financial, steady Eddie. Lower left, upper right, just pulled back to the 50 with a big up candle. That's interesting. Eastman Kodak, only reason it popped up on my list is because it had a mobile breakout. Took out the 200, a pocket pivot and a kahuna. Um, kind of a loosey goosey stock. Legend Bio, this is one that I liked in the past. Healthcare is doing better. This one has got some really exciting recent news. I think that this one may go higher here. This is speculative. Hilton, boring, sleepy hotel, sideways move as it pays for a breakout. Penny Mac Mortgage had a big move on Friday, pays 11.8. If you pay 11.8, all you need to do is go sideways. 11.8% dividend. Rhythm Pharmaceuticals, nice little uptrend, shallow uptrend, trying to break out from the 50. Trinity Capital is another one of these asset management companies, 13% yield. But market's getting sick. I might be looking for yield plays. Here's Tornado. We talked about that early sideways move, perhaps ready to break out off the 50. SL Green, this one's down by the 200, so it's a lot less attractive, but look at the earnings per share growth. Are department stores or shopping centers going out of business? I don't think so. Um, and it pays a 4% dividend. NBIA, the insurance, when you get your mortgage, sideways move here and a big breakout on Friday. Hartford Financial Group, looks like a horrible day on Friday, doesn't it? But look at the reversal candle, back above the 50. This one could be interesting. Two Harbors is another specialty finance, 14% dividend. And I don't know anything about these except the charts are not that awful. They're not great, but look at those dividends. And how likely will they keep them? I don't know. Helix was one that was a pretty decent flyer, then it lost its mojo. It's making another run. Actually traded higher on Friday before the reversal. Rocket companies, you notice the trend here. I've got a lot of stocks that have pulled back a lot. Um, if you want to see true leader, and then Star Bulk Carriers, one more on the pullback side. I'd rather buy things that pull back to support and move with momentum than buy things that have extended, especially in a tough market that we're at. Something like Brothers is another stock you can look at, but I mean, it's sort of extended and far. And what happens if this market rolls over? But I showed you a lot of stocks. Do I think they're the greatest list? No. I think some of them are really good. Certainly the first bunch. I think it's going to be a tough time now. I think that the markets will give us a big signal on Sunday. And I'm going to be holding on my hat as I'm driving back to the East Coast of the U.S. And see you next week. Have a great week, everybody.